All right, we're going to have a very exciting discussion now because we have the money people with us. These are the guys, they write the checks. They are writing them not just $1 million checks, they're writing $1 billion checks to companies that are defining this future, redefining the future of technology, of AI, of how the workforce will look like 5 years, 10 years from now. So let's spend some time with them to understand how you guys are doing this, how you guys are making those decisions, what are the frameworks, because yeah, we would like to know. We would like to know not just from Trident's perspective, but we'd also like to know from, I'm sure there are a lot of budding entrepreneurs here, right? And how they should be thinking about developing the capabilities that they would like to probably work on at some point, and how they can convince you guys to write checks to them, right? So yeah, so I have a few questions, but before we do that, why don't you guys introduce yourselves? Maybe starting with you,
Sure.
Rishabh.
So hi, I'm Rishabh. Work part of Chris Capital. I've been with them for almost 8 years now. Part of the enterprise tech team. Done a lot of work on the IT BPO sector over the last 8 years. As a firm, we've done over 100 investments in India, and enterprise tech has always been a key focus area for us. We've done over 20 investments, been part of almost every mid-tier IT services name that's listed today. And we continue to be very excited about enterprise tech, spending a lot more time on digital transformation businesses as well as businesses that are AI first, and also increasingly spending time on SaaS and software businesses that are incorporating AI.
Thank you. Good. Anirudh.
Yeah. Hi everyone. Sorry, I hope this is not too loud. My name is Anirudh. I'm a principal at Apex. Apex is a sector specialized private equity fund. We manage 80 billion of AUM. And tech services is probably our largest sector, where we've made around 25 investments in the last 10 years. That ranges all across broad-based IT, product engineering, analytics, cybersecurity, and also the software side more recently. I spent close to about 11 years in the space, first with McKinsey for 3 years, and then 8 years in private equity. Really looking forward to the discussion today, and thanks for having us on.
Thank you. Arjun.
Yeah, no, I can go next, and I do know quite a few of you here in the room, and I'm sure a few of you would know me, given that we've been associated with Tridents for the last 3 years or so, right? Ever since Tridents was a $95 million company, right? At that time, we've come a long way since then. So Shubh Binaway already convinced us to write a check. So yeah. So no, I've been with Advent for 5 years now. Work a lot in the tech services space, and was an operator before that. Running P&Ls, running businesses for several years before that. So yeah, looking forward to this conversation.
Thank you. Thank you. So maybe I'll start with you, Rishabh, and each one of you can chime in. So AI investment trends. So where is the capital flowing, and what's driving investor confidence today?
So today, a lot of the capital continues to flow into companies in the Bay Area. I think almost, I want to hazard a guess and say almost 80% of all revenues today, all investments today are happening on large language models, foundational models. We're projected to do almost $200 billion of investments in AI this year, largely being geared towards the valley where everyone's talking about foundational models. A lot of investments are also happening from the hyperscaler perspective. There's a lot of investments going into Databricks. The hyperscalers themselves, Salesforce, NVIDIA, as well as Microsoft, Google, making big bets on AI, on what would potentially be the future.
Thank you. Anirudh, do you have a take on that?
Yeah, no, absolutely. Look, I think I'll probably address your second question first on investor confidence. I would say this is probably one of the most dynamic changes we are likely to see in this era. Someone talked about AI being and the discovery of generative AI likened it to the discovery of electricity. And if you think about how it would basically come about to be in everything that we do and every type of enterprise, whether it's a tech enterprise, whether it has nothing to do with tech, I think it's top of mind for every CEO, every board today. And we see it in our portfolio, which is not just tech companies, but anything from accounting services to insurance broking to consumer companies, everyone's talking about this. So I guess big picture, the impact of this technology we feel is unprecedented, and the power of this is very different than anything we've seen before. I mean, I wouldn't even compare it to, let's say, an RPA or even the cloud for that matter. The potential is immense, and that's what's driving investor confidence. As Rishabh said, I think money is flowing in every part of the AI value chain, whether it's foundational models and LLMs, whether it's infrastructure in the form of silicon chips, whether it's applications which are just wrappers around existing models, whether it's more deeper domain-focused research. I think it's a very exciting time to be here, and yeah, I think this will continue to see this. We're just scratching the surface, and this will spark multi-decades of investment, in our opinion, in the space.
So, Arjun, please feel free to add, but I'm also going to add a little bit of a curveball. So I live in the San Francisco area myself, and in addition to confidence, there is also a fair bit of anxiety. So, yeah.
I'll come to the anxiety point in a bit, but one stat that threw me off in a bit was, last year, if you take the total venture capital funding in the US, almost 46% went into AI or AI-enabled organizations. Now that's a stat that was 10% 4 years before or 5 years before. It's a massive shift towards where capital is flowing. And second, you also see people kind of moving away from just the, investing behind the core, the AI chips and the foundational models, but also towards allied areas which are going to get the benefit of the AI wave, right? Obviously the data centers, even electricity generation for data centers, right? Which is a up and coming thing, clean energy, etc. So the other point is check sizes have also increased significantly. So very early on in the life cycle, several of these AI-enabled firms are getting investments of $1 billion plus, right? We saw Anthropic last year getting $1 billion plus from someone, Lightspeed or someone, right? So these are things that have not happened historically. It shows a lot of belief in the system. But to your point on the anxiety, Shubh, I kind of believe in that too, right? There are some parallels to the dot-com boom of the 90s that we are seeing, right? A lot of companies are getting investments. Not all of them are going to survive, right? So there's going to be some level of consolidation, and hence, you need to go back to the basics, right? You've got to have a scalable model. You've got to have a path to profitability. You've got to have a good founder team, a good management team, the same things that typical investors look for, right? And differentiation in the market. That's your key to succeed. If you don't have some of these, it doesn't matter if you're in AI, if you're doing the coolest agentic AI stuff, you're not going to survive.
Thank you. Thanks, Arjun. And to your point, the value, the numerator coming off of these investments for you guys, how do you think about that, right? How do you think about the ROI? And what I'm really trying to get to is, how do you know the company is really investable? The frameworks, the attributes you mentioned just now, a good management team, a reasonably good product where you are seeing some initial signs of success. But what else makes an AI company investable? Anirudh, if you want to just take a crack at that.
Yeah, no, absolutely. I think the 3 or 4 things that we are typically looking for, and then the space is so fast evolving that even our frameworks and how we are looking at it keeps changing. But I would say number one, in addition to what you mentioned, is how much of reskilling and upskilling of the existing talent base is happening. And I know a lot of companies are coming out with statistics on your next percentage of workforce upskilled or trained in Gen AI. But if you sort of unpack that and see how much adoption is there on a day-to-day basis, how are teams actually implementing it in their workflows, that is where the magic happens. And so I think that's number one, and it's hard to diligence, but definitely one that is top of mind. I think the second is around scalability of solutions that you're offering. I think there is a lot of bespoke work happening, point solutions here and there, which is very interesting and definitely proves the concept and ROI to begin with. But how do you sort of scale that? And I think the way that works is if you're solving a solution that has application in an industry or a function, that makes a lot more sense. And we're seeing companies that are specializing in, let's say, I'm sure many people are aware of coding assistants here, but let me take a step forward. Like there are many companies that are specializing in, let's say, insurance today. You know, how do you build insurance agents? How do you build internal workflow tools? And similarly, we're seeing signs of that in other domains as well. So those are examples of more scalable solutions that would help drive ROI in the long term. The last thing I would say is companies are pivoting towards, more interesting pricing models with companies. And so we're seeing a significant shift towards outcome-based pricing or, fixed bid pricing essentially, as opposed to, more T&M. And we're seeing companies doing some very interesting stuff with that. And as you do that, it allows you to not only deliver value to clients, but also apply some of these tools internally and, sort of share the productivity gains that are coming out of some of this.
Great point. Thank you. I mean, on the outcome-based point, at Credence, Shom just talked about the Milky Way agents, right? And at some point in the future, our statement of works may be a combination of human consultants and those agents, right? And so we are thinking how to sort of structure the economics of these new contracts of the future, where we will still be delivering the same amount of value, but we will be doing so with fewer people, right? It's mic a little up, yeah. So yeah, great point, Anirudh. I'm going to pivot to the next question. Actually, it's kind of a good segue, Rishabh, which is, obviously catching the consumer is a fantastic thing to do. I think Perplexity has done a great job. But on the enterprise side, right, Anirudh talked a little bit about the domain use cases. So how do you think about, how are enterprises, as in B2B large businesses, realizing the value from AI, or is it still a bet for the future? I mean, it hasn't happened yet, but eventually we'll get there.
I think it's a great point, and we debate this all the time. We've been investors in an RCM business. We've been investors in a CX business, and the constant question that we are defending to our investment committees are, what is the risk of AI in some of these businesses? So far, and on the other hand, we see it on the tech services business that's constantly working on POCs on Gen AI with a lot of the leading Fortune 500 companies today. In a sense, today what we're seeing on one side is enterprises willing to spend anywhere up to $10 million on POCs on generative AI and what those use cases could be. But on a lot of that today still resides in trying to improve employee productivity. There's the innovation aspect within enterprises today, we still see it as being limited. There's a lot of generative AI today that is being, I would hazard a guess again and say that almost 50% would be coding co-pilots, coding co-pilot cases, not necessarily Gen AI, which is disrupting how domain operates, and or agents that are being used for employee productivity in some operational workflow, but we're yet to see sort of fundamental changes within enterprises. So at some level, it still, in our view, it is a bet on the future, not necessarily today. We're cognizant of it, and we want to be watchful of what are the new changes that happen. And similar to what Anirudh said, the space is evolving so quickly. We're always on the lookout for if there's some voice tool today that can be replicated, and you might no longer have 10,000 people working from the Philippines or India supporting an insurer in the US.
Yeah, thank you.
If I can build on that, Shubh, right? And to quote the results of a recent survey, less than 1% of enterprises believe they've really leveraged what AI brings to the table. So this is clearly on the minds of people. And if I were to summarize three themes that probably work across enterprises, irrespective of which sectors, functions they are. One is the whole concept of agentic AI, both on the front as well as the back end. Everyone's exploring it. There are 50 agentic AI startups which were launched in India in the last 1 year. Enterprises are trying to partner and figure out what they could do with it, right? That's number one. Number two is this whole concept of digital twinning, right? Particularly in the back end of things. How do you kind of have those working for you? Training your people, getting them to experience things live even before they do it in a real machine or in front of a real customer or whatever the case may be. And the third is the shift of the data set towards heavily being video dominated, right? Video is the new data as opposed to data and Excel sheets and all of that, right? So a lot of companies are figuring out what to do with potentially a better source of insight, which is video, as opposed to, and obviously way more difficult to process compared to earlier sources of data. Now these are still in the early stages, so there's a lot to come. Obviously they're all looking for partners, and that's where, all of you come in, right? Which is, bring those capabilities, bring those ideas to them as to how they could move from the POC stage to real structural transformation, which is going to take quite a bit of effort and quite a bit of investment as well. And if I may add one more point, right? There's also the difference between a challenger and an incumbent in the way they are thinking about Gen AI, right? In a certain sector. Challengers are using AI and Gen AI as a way to potentially figure out a lever to leapfrog the leader or the incumbent in that. So they've been adopting these tools a bit more easily, a bit more actively than the incumbent leaders who are still taking their time, right? That's an opportunity. And that's also an opportunity for the incumbent to kind of say, hey, let me actually extend my dominance in that market.
That's a great point. That's a great point. So you're saying the number 2, number 3 company across various industries, it's an opportunity for them to leapfrog using some of these technologies. Yes. Yeah. So if I may pivot to the next question, and the 2 parts to this question, and it's more about tech services in general. The first part is more general and the second part is more specific to India. So how do you see tech services as an asset while you're thinking about investing into a tech services company? How do you think about these investments? Because, I talked about the headwinds earlier, right? The whole model of having X number of billable bodies times the bill rate equals revenue, and the scale was about scaling people and adding more people. That is likely going to get disrupted, right? So how do you, in the midst of all these disruptions, how are you guys thinking about investing into tech services companies? So if I may ask the second part of the question as well, and I would like all 3 of you to chime in on both parts. India, right, we are a knowledge services industry. There are, I don't know how many, I don't have the number, but I'm sure it's a significant number of people who are working on, in the tech services industry, probably hundreds of millions of people. And, just if I add up the top 4 or 5 companies, it's $100 billion in revenue, right? So how do you see these companies reinventing themselves in the middle of these changes and transformations?
I can probably touch upon the second part of the question and would love to invite my panelists on the first part, which is there's a little bit of a saying I want to kind of put on the table, right? AI will not replace tech services knowledge workers, but tech services knowledge workers who leverage AI will replace those who don't. So that's something that I guess every person in the room has to kind of think about ways to upskill themselves, to leverage that as part of leverage AI as part of the core value add that they already do right, to their customers and to their clients, right? And how do you kind of do that? And that's where, that separates, I would say, an investable and a long-term build-out of a tech services major versus someone who's not going to get there.
Okay.
Over to you guys.
Absolutely. I think it's something we debate a lot internally. So I would say big picture, that's where I'd start, is this wave of GenAI will create significant distance between winners and people who will get behind. I think many people in the room have been in the industry for some time. There have been periods when the industry spends were on steroids, and pretty much everyone grew. Now, obviously, some people grew faster, some people grew a little, but everyone grew. I think this is a period where there are some companies that are going to go really well. They will reinvent themselves. They will slightly disrupt themselves as well, but in the process of doing so, they will disrupt others more. At the same time, there are many companies that are just going to get left behind, and there's no doubt about it that they're going to get disrupted and going to see a very tough time coming ahead. So I think that's the big picture. If you break this down, I would say we've never seen, and nor do we continue to think, is that tech spends will not come under pressure. I think tech spends remain sticky, continue to grow, but where those tech spends are going has continuously evolved every few years. And so what worked 10 years ago, for example, with the offshoring wave, doesn't work now, like everyone's offshore. Then there was a product engineering wave to tech ISVs. Then there was a product engineering wave to enterprises. And so whatever worked in a certain set, you have to continue reinvent themselves, and that's what I think will happen here. And so where we are spending time on tech services the most is the most growthful areas, which is data engineering and analytics, where we think people will continue to spend a lot more money. And like I was saying earlier, I think there is multi-decades probably of work to happen here. So I think that's our view on tech services. But I think on the more coding heavy and service lines which are more focused on that, I would definitely agree with Arjun. I think people who will use AI will leave the others far behind. And I do think that's a big question mark, like you said, Shubh. I think there are close to around 7-8 million people employed in the sector in India, and the top 4 or 5 companies, like you mentioned, 100 billion plus easy of revenue. I think those guys are probably going to have a tougher time, in my opinion, as they reinvent themselves because of the scale that they have, and it's always difficult to disrupt yourself. But it's the mid-sized companies, the companies which are anywhere from, call it 100 to 500 million of revenue, in my opinion. Those are the ones which are really going to embrace this technology, become strategic, AI consultants to their enterprises, and disrupt the others. That's the way we see it playing out, but we'll see how things evolve.
Thank you.
So,
go ahead.
actually, very contrary view that we hold on this piece. We've seen sort of the offshoring wave happen and we thought that when IBM and Accenture would set up shops in India, that the offshoring guys in India would have a hard time. Infosys, TCS continued to grow. When the digital wave happened, we thought that jobs would continue to be running onshore. You would have app development that would be done onshore. Indian IT reinvented itself. We started acquiring businesses that were onshore. Then COVID happened, and you thought the GCC wave would happen, and there would be a mass exodus of employees moving towards GCCs because it was better payrolls and better incentives. Indian IT sort of again built through that as well. So I think companies continue to stay resilient, and as long as enterprise adoption of AI is gradual rather than a step shift, I think we'll see Indian IT in general do well and adapt to the sort of situation. They've learned from the past mistakes. Infosys, Wipro, all the large IT players are very acquisitive today. They've learned from the Cognizants and the Accentures of the world. Smaller companies are doing the same. Smaller $100, $200 million companies, PE-backed, are learning to sort of acquire businesses. In the past, it was capabilities around Salesforce, Azure, and today it will continue to be something around data and analytics. So, at least I personally think that there's definitely, I don't see any disruption to Indian IT in the long term. Of course, the opportunity for smaller companies to skill their employees faster and grow faster absolutely exists.
If I may add one point to that, right, and I was seeing both Pratap and Nilanjan in the room, right, the CFOs. So there's also a massive pricing opportunity, if you ask me, right. Ultimately, what do tech services firms do, right? You add value to enterprises, and you can obviously price basis how much value you're adding to enterprises. And we all know that Gen AI is going to be a game changer for many enterprises, right? So why don't we see that as a massive opportunity for growth for tech services firms?
Yep. I'll ask my last question and then we'll open it up to anyone who would like to ask the panel any other questions. What's next? Right. I know we saw Jensen talk about robots in the GTC last week, on the chip side. Quantum is another, we keep hearing about it on the computing paradigm. Maybe something in XR, but what is it that you guys are looking to invest in? What next in generative AI or agentic AI in general? Yeah, we can follow any sequence you want. Yeah.
Sure. Well, at least we're looking at more domain-specific solutions. I think the next innovation around which will be built on top of AI in healthcare, manufacturing, consumer technologies, I think those are what we would think are sort of the future. Quantum computing and robotics are definitely things we'll watch out for as and when the VCs pick up steam on that and we then get the attention, they get our attention. So,
I think Rishabh's covered most of it, but the value of specialization in AI is going to be key going forward, right? I mean, right now we've got all generalist AI stuff coming through, right? I mean, it's all nice, it's all flashy. But then the power of memory, the power of specialization and really long-term companions for very specific needs operated between enterprises and their customers, right? So that's going to be future. I mean, it's probably a next level evolution even beyond the agentic AI paradigm that's coming through. But that's going to be a game changer. So specialization within what we call AI today. The second is it's also a shift in the way the consumer will start seeing and using AI because of democratization of hardware and capability, right? What was earlier in the realm of all the large data centers and what Jensen cooks in his kitchen, right, is pretty soon going to be in everybody's hands and their pockets, right? We had the smartphone revolution from stuff that was just messaging back and forth to stuff that processes in your hand. But the next stage is to have all of that AI capability in your hand. So imagine what more you could do with all of that, right? So these are enablers. It's difficult to predict, honestly, Shubh. Very easy question to ask, but very difficult to predict.
Writing the check is difficult. Go ahead, Anuradh, if you want to add something.
Yeah, no, I think just a couple of points to add there. One, again, just starting from the macro view on this, what we are really looking forward to is some more clarity on the regulatory front and scalability of these models, or rather more of the explainability of these models. And I think that's the long pole in the tent to enterprise adoption, in our opinion, particularly in some domain and regulatory heavy industries like, let's say, healthcare. Or even insurance for that matter. And we think that is other short-term challenges like data silos, upskilling of talent bases. I think some companies will just figure it out. But that's a long pole in the tent, and that's where we think the current wave of technology will lead to at-scale adoption once those issues are sorted. And that there, it may very well play out in a more gradual way, as Rishabh was saying. I think in terms of next things we're looking forward, I think it's unsurprisingly for us fully on the AGI and what's the capability they bring to the table and how easily can that be customized to specific solutions. Whether it's healthcare, let's say drug discovery, whether it's cybersecurity, responding to real-time threats. I think the potential of that they will bring and how easily can it be applied to these domains is what we are most excited about. And again, we think that could be a real game changer for enterprises and the services companies that will help them realize this.
Thank you. Okay, well, we'll open it up for
we
some
open up for questions? If anybody out there has questions, you can put your hands up. We pass the mic on to you. Sumit is okay. There you go, Sumit.
Hey, can you get the First of all, thanks for sharing your thoughts. I mean, I can open it to anyone if you like. Please, I would love to get an answer from everyone. So, the life has changed at least in last year alone. Forget about last 3 months. Has your thesis of investments changed to an extent? At least, are you taking a pause or continuing as is to what and how you guys were thinking of investing a year ago? Let me rephrase my question. Are you taking a pause on some specific assets that you were keen on earlier and now let's wait and see? Or is it, nope, everyone will figure it out, let's just keep going? How do you see that?
Yeah, maybe I can go first. And again, this is probably a very APAC specific view. But the three things I would say there is, one is the biggest change in our investing style, let's say a year and a half ago versus today, is we are looking to invest in somewhat smaller companies than before. And which is quite a contrary trend to most of our world, because people want to go bigger, which is also what we have done for most of our history. But we think the real innovation, like I said a little bit earlier, is happening in the mid-sized services segment, and we were always looking at companies at the top end of that segment. We're increasingly looking lower end, because that's where we think innovation is happening, and those are the companies not afraid to disrupt themselves and hence disrupt industry. The second thing I would say in terms of our thesis is, I don't think there is any segment of tech services where we are saying we need to take a pause. Even coding heavy product engineering shops, in my opinion. But it has to ultimately reflect in valuations. So I think the valuations of those shops, what they were commanding a few years ago versus today, in my opinion, has changed significantly. And the third thing is, can't stress this enough, I'll almost sound like a broken record, which is so overtly focused on data engineering and analytics shops, because that's where we think all the action is, that's where the enterprises need the most help. LLMs and software and everything will get you to 80% of the way if I'm an enterprise, but the last 20% will be delivered by services companies, and that's a massive opportunity upcoming even today, but even more so upcoming.
I think from our perspective, there's been not that much of a change on our front around our view on tech services. Continue to be excited by it. We think that there's no limit to the amount of code you could write with your imagination, and AI just helps you. So from our perspective, we continue to be sort of excited by tech services, even product engineering shops. It comes down to the valuations. But we are increasingly asking ourselves, how does AI impact certain industries? So, and this comes down to a lot of the impact that digitization itself had, right, around telecom and CPG was always first to adopt technology and adopt new software tools as well. So if the end clients that tech services companies are telecom companies, we're taking a pause because we feel that there's a lot more disruption there. There's a lot less likely disruption in more regulated sectors such as BFSI and healthcare. So we continue to sort of see that as a trend where it'll be slower to adopt Gen AI compared to the other industries.
I mean, I echo the thoughts, right? The fundamentals of investing don't change, but I would say that we've also been kind of, ramping up our understanding, right, of the space, right? Because as investors, you got to have a point of view of what's going to work and what's not going to work. So this entire AI wave has given us a lot to kind of dive deeper into, understand, relearn, learn, all of that, which we are doing. And it's also about figuring out who's going to advise us in our investments going forward, right? I mean, we work with a very large panel of experts and advisors globally, right? For us, it's also about getting the best to our portfolio companies going forward as we invest in those firms. So those are some of the, I would say, the incremental thoughts beyond the fundamentals that we keep doing.
Thank you. Any other questions, guys?
Yeah, hi. I have a question. With the market softness that we are seeing yesterday with the US applying 25% on the auto industry, the tariffs, etc., how are you seeing this affecting the IT services space? We do work with various verticals. Are you seeing softness in CPG? Are you seeing softness in travel and hospitality, for example, or retail? or banking, and how are you assessing that whole thing coming forward? Because it's a future-looking stuff that we should be worried about, or because we are disrupting through AI, we should not be thinking too much about it. Just wanted to your perspective on that.
Karthik does our sales forecasting. That's why he's asking this question.
So Karthik, at least my point of view is we've been seeing volatility in the last few months due to various factors, but I wouldn't conclude on softness just yet, right? The volatility will continue for a relatively short, medium term, but again, right, to answer your question, too early to conclude one way or the other on softness, US recession, India growth coming back faster versus slower. I don't think there's any measurable insight that we've seen to conclude on any of that. It's still wait and watch. The opportunity is still very, very robust for tech services, for the kind of work that we all invest in and we all do. AI is obviously, the last 30 minutes is continuing to remain very robust as a growth area. I don't know if you guys have a different view.
No, I think on the macro view, I fully agree with what Arjun said. I think that's true. I think the way I would say on the micro view is, if you break it down, there would be second order effects on some of these companies. Like a CPG company will become a little bit more cost conscious. Some of the other companies will become cost conscious. And so I think they will relook at the ROIs of some of the projects they are running. And so if you're in the high value ROI driven projects, I think they are going to stay protected. People are going to continue to invest there irrespective of what's happening. But if there are projects that won't justify that ROI, or places where they think it's more keep the lights on and we need to optimize costs, those areas could potentially see some pressure over time maybe, but like Arjun said, I think early to call, but that's how I would break the micro.
So I have a question on AGI specifically. What's your view and approach towards companies who claim to do research in AGI? Do you really think it's going to happen in the next 1,000 years, as Sam Altman is claiming? Or do you think that there's just a lot of talk? Because whatever evolutionary context that's been built into humans, which makes us human, do you really think that it's going to come in reality in AGI? And what's your approach towards investing in such companies?
I can take a crack at it. I think as fundamentals of investing don't change, we like to see proof points on return on capital, on ROI, whether enterprise adoption whether there will be enterprise adoption, whether there will be consumer adoption. So looking into the future and whether an AGI or extended reality becomes is possible or not is not something that as investors, at least as private equity investors on this panel, I don't think we would think about it. We like to see proof points before things actually emerge. We're happy to be late to the game and pay a higher valuation, but we tend to avoid investing in sort of dreams. I don't know if you guys agree or disagree.
Yeah, I would tend to agree with that, right? So investing is not just about finding the right company, but also about the right time to invest in that company, right? So some things few years down the line, some things we probably already missed the bus. So it is the timing element is very important.
So PEs are not investing in AGI yet.
Too early, very. Yeah.
But VCs are.
I think certainly VCs are investing there. Pretty sizable. But yeah, I think as both my panelists said, I think the private equity to really focus on it, it's some time away.
Yeah.
In general, I mean, if I take a look at Gartner hype cycle on AI, I think it's taken a bit of a pause. I think the seed funding has sort of it's not going up as much as it was. I think it's plateaued at some level. So we'll see some normalization on where this ends, and then we'll see sort of the actualization within enterprises and consumers, and you'll start seeing the ROI on it, and then probably we'll be ready to take on the next level of AI.
That while AI is probably being used in every other industry today, how you guys are using AI in private equity, how you are using AI to evaluate certain assets, identify certain assets. So what is the real AI use case you guys are having today, or is it too early for you guys?
So, I think that's a great question, and I think maybe I can start. And we are trying to integrate parts of AI into our workflows, and let me give you a few examples. I think the first one is we have a tool which can now read initial materials and put together a financial model that can spit out returns. You can play with it. You can, with prompt engineering, add more elements to it, like whether you want to, let's say a dividend recap in between, you want more debt on the company, or so basically you can do financial modeling around that. I think the second way we are using AI in our workflows is portfolio monitoring. So we've expanded the amount of data metrics and frequency at which they are captured to identify which companies are potentially going to see softness, and this is more applicable, I would say, to our business services and consumer industries, less so on the tech side just yet. And the third way we're using AI right now is frankly day-to-day research. I think it's been a game changer using Perplexity or ChatGPT's research logical reasoning module. Stuff that maybe some of our team members would do, or we also work with a few outsourced firms that KPOs that they would take like 2 or 3 days to turn around is like available in like 10 seconds and probably similar if not higher accuracy and breadth. So that's been a game changer, I would say. So we've got an enterprise license around that as well in our own instances. There was a time not so long ago when we were worried about data privacy there, but we've gotten increasingly comfortable with it.
I mean, I'll just add, right, well, Anirudh covered all the use cases today that we also use. I would say that the whole data security, data governance piece is super important for financial services institutions and particularly private equity venture capital funds, given the confidentiality of a lot of stuff that we do. So that's an important area that we keep watching, right, for evolution in terms of our adoption and use of AI as a whole.
Thank you. This panel says time's up.
Okay, we have time for 1 or 2 more questions. People behind, put their hand up here.
Hi, this is Aditi. Thank you for the panel. Yeah, sorry. My first question is on AGI. So, like you mentioned that we still have a lot of proof points as an investor while looking at startups, but in an AGI world, like a lot of startups don't have a product in hand. So you're potentially inevitably sort of investing in a pre-product or in a risk of sorts that will materialize later on. And we see that a lot happening in the valley. So how do you square that in terms of the risk and reward ratio, and how is India different? Secondly, we saw the Salesforce CEO among other CEOs of AI Western labs talking about they're going to stop hiring engineers. And that's the reality. As in India, we really don't take abruptly or like as easily. So do you see the future in terms of agents being like one startup with like 1 person and 100 agents? Like, is that something that we see going? We already see a lot in the West where Y Combinator is investing in startups with barely like 10 people and many agents. So in an agentic investing world, do we see that happening with, or like AI plus humans are still going to be there as like in terms of the fundamentals of investing?
Yeah, so I'll answer the second part of your question, Aarti. I mean, see, it's important to not confuse a productivity problem with a cost-cutting problem, right? So for me, AI is about the productivity piece. How do engineers and knowledge workers really use AI to fundamentally get rid of the slightly more transactional elements of their work, and also some of the, hopefully at some point, customer-facing elements of the work also gets into the AI zone, and really focus on what's going to be value-adding, right? So that shift 100% we will see. There is an element of cost-cutting that happens across organizations globally at different points of time depending on how things go. That will not fundamentally change. Some of it may be attributed to AI, and that I think is also a little bit wrong if you ask me, right? And I don't think it's a direct cause and effect. At least that's my personal view. So we've got to be very careful when saying that that AI is killing jobs. I don't think that's happening really. Except if someone's doing really, really transactional, only transactional stuff, and you found a way to automate the whole thing, yes. But a lot of engineers, a lot of knowledge workers are not operating like that.
I fully agree with that. I think the softness that broader tech services is seeing and the broader industry is seeing is more driven by, I would say, macro spending, where the rates were, how people were thinking about digital IT spends, and less about AI truly killing jobs today. And we don't think we don't see signs of that. We are seeing, I would say, signs of a few tier ones being very aggressive in pricing projects. But when you talk to them, I think they're also figuring it out. And so on the margin, there is some disruption happening in terms of, one vendor coming out and say, hey, I'll do this piece of work with 20%, 30% lesser people. But I can tell you, speaking to them, they're sort of betting on the future and they'll figure it out. But at large in the industry, we don't see that trend just yet. And on your first question, I think that's probably more for the VC world. I think those are the guys taking the bets there. Very different for the private equity world, where I think, as Rishabh mentioned, we do need to see proof points, and I think both the risk and reward is so high on, let's say, investing in something in agentic AI today. I don't see any private equity fund, or at least most private equity funds taking a bet there just yet. I think some element of proof points and how this space would evolve is necessary for that. But that doesn't stop I would say, the VC funds and the Y Combinators of the world really putting big dollars to work there, because that's sort of what they do, and I think they're betting on the technology wave there.
Okay. Any other questions?
In the interest of time, maybe we'll have one question, right? If that's a short one, maybe you can take one more. Let's try and keep it short. Yeah, let's go.
Hi, this is Abhishek here. I had a question around, like Shubh announced our Milky Way initiative an hour back, right? So from an investor standpoint, or somebody who's scouting for these kind of opportunities, how do you perceive this initiative of ours? Like from a valuation standpoint, or our readiness from the future standpoint, is something which I would like to know.
I'm a very interested party here. So all I can say is that I hope and wish that the whole Milky Way initiative becomes a massive success, right? And I'll leave it at that.
Did you understand the question?
No, I must admit, I wasn't aware.
I'm not aware of the Milky Way
quick context, right? So we are announcing a family of agents in Tridents. We're going to call these our Milky Way agents. These will start co-piloting, potentially even, doing the work for some of our, let's say, junior levels in terms of analysis, a supply chain project, a marketing analytics project. So we are starting to develop these MVPs. And Abhishek's question was, as investors, how would you, how would that, in your evaluation framework, how would that look?
So I would say, look, any accelerators and capabilities for a company are definitely aspects that we evaluate during an investment, right? It's not just numbers on a page. There are multiple other aspects we think about as investors. There's the management team, there's the core capabilities that they've built. It's a way of doing things. Is there a Trident's way of doing things? Those are all aspects that add a lot of value. So definitely, this is something that adds tremendous value to Trident's as a brand for customers as well as for investors.
I would certainly agree. I think there is a difference, I would say, between many companies having this version of an accelerator, this version of a platform that automates things, versus having truly useful internal bots that drive productivity increases. And I think the latter is something that we are starting to see some of the most innovative companies doing. And my personal belief is that is the future. I think in very short order of time, the way we will evaluate companies is if you don't have this, that's a big red flag. Versus just a few months or a couple of years ago, if people had accelerators, as Rishabh mentioned, we would evaluate that and would go to our evaluation process. But was it so critical or something that we focused a lot of time on? Probably not as Apex, but yeah, now going forward, it's just imperative in my opinion.
Hi, I just have a quick question from the people-centric approach, right? So my question is, do you see greater potential in solutions that augment human expertise in specific domains or more broadly empower the daily life of a human? Where are you seeing your future there in terms of investments?
I'm not sure I understood the difference.
A domain-specific product versus a more general product like Perplexity. If you have to choose between investing in these two categories, where is the priorities?
I think I kind of touched upon this a bit earlier. For me, one of the, I would say, the evolutionary paradigms in AI would be towards domain and specialization, right? You solve a very specific business problem for an enterprise, right? With obviously the specialization, the memory, the knowledge, the capability all rolled into it. I think that's the untapped part of AI today. So that's where I think there's going to be a lot more coming our way.
No, I would fully agree. I think the first part, the domain specific and B2B space, so to speak, I think will be much more broad-based and have significant spends behind it. I think the B2C space will see emergence, ultimately will see emergence of a handful of players which will dominate the market versus so many players today. If you manage to bet on the right one there, I think you could see very outsized returns. But calling that is much harder than calling the first part, which will be much more broad-based. So I think from a private equity standpoint, I expect the first to see a lot more investor interest.
Okay. I think there's one. That would be the last question, guys. Yeah. I see a hand.
Are we taking that? Yeah. Okay. Let's go. Quick one.
Jitendra.
He's had his hand up for a while now.
He's.
All right. Hey, thank you so much, Mr. Solo. I'm Jitendra, and thank you so much for sharing your thoughts here. So my question is basically, how do you see the global markets going, right? And in 5 years or 10 years, right? Because we see US, China moving pretty fast with respect to LLMs and other things, while India has been a laggard. So how your investment decisions are going to be in future? Where do you see yourself going, or any other investor for that matter going, in which markets, and how do you see India picking up?
Well, I wouldn't necessarily say India has been a laggard over the last 10, 15 years or so, right? I think there's just been a massive transformation, and that has also led to us as a firm investing significantly more, deploying more capital, a few good exits as well, right, across sectors. So for us, it's a bit more nuanced than that, right? I mean, I don't have something that tells me where the world would be 10 years, 15 years down the line. It's a very difficult question to answer, Jitendra. But having said that, the subsectors that we are focusing on, the geographies that we are focusing on, and separating the winners from the rest, that's the basic sauce, right?
Jitendra, I can take a crack at that. So I would say that India has actually not been a laggard on AI. Probably the amount of funding that it has received, it pales in comparison to the Valley. But if I take that out, I think we've been quite good on the innovation front over here. Whereas on the software side, it took us it took us until 2020 to have more than 3 companies which are larger than $100 million in revenue on the software side, whereas the US has had hundreds of companies. So I think on the AI front, we'll probably be faster to catch up, and just in general, how innovation has picked up in the country over the last few years, as well as domestic markets being very resilient, continue to be big supporters of India.
Right, with that, let's give them a huge round of applause, everybody. Come on. Can we keep it a little more louder? Right, it's a great start. I think we're starting the panel. This was the first panel, in fact, with a lot of energy and a lot of insights. Thank you so much.
Thank you, guys.
Once again, can I request you all to put your hands together for everybody here, please? Yeah.
Thank you.
So with that, before we let you go, all right, there is a surprise for you guys because we've captured the complete discussion in a very, very creative way. Shubh, I would request you to hand this over. We'll also try to get this on the. Can we get this on the big screen if possible? Yeah.
Wow.
So she has been drawing this.
So
while
people
we-
behind, we're able to see it. If we can just
We-
flip
we-
it here. There it is on the big screen.
Yeah.
Right, that's the complete, MOM in a very, very creative way. We've got a scriber who's sitting here and getting this done. Right, thank you so much once again. I'll let you guys enjoy the rest of the day. Have a good day, everybody.
Some things are much better done by humans, compared to AI.
Thank you guys. Thank you so much. Thank you.
Thank you.
We'll give you guys copies, each one of you a copy.
Thanks so much.
Right, thank you. With that, before we move on to the next panel, I thought we'll try and up the energy. Okay, I know a couple of people have come in and a couple of people have gone out, but it's completely all right. I need everybody to stand up. Everybody to stand up. Let's try and up the energy. Everybody please stand up. So, first things file, I want everybody to smile, okay? I see a couple of people very serious, okay? I want everybody to smile. Take this light. A quick set of energizer before we begin. This is basically a number game, all right? When I say number one, when I say one, I want you to put both your hands up and give me a clap. Everybody, put both your hands up. When I say one, let's try it. When I say one, I want you to put both your hands up and give me a clap. Come on, one. Oh, come on, a little more louder. One. Check. When I say two, I want your hands on the hip. When I say two, I want your hands on the hip. I want you to bend backwards, and give me a villain laugh. Okay, everybody. Yeah, when I say two, you basically put your hands on your hip, bend backwards, and give me a villain laugh. Come on. Two. You gotta be loud. When I say two, I want you to give me a laugh. Two. Okay. Let's try and, have this in some time. Before that, we get ready with the speakers. All right. Put your hands together and join me to welcome our next set of panelists. This is basically the customer panel. And I'm going to be inviting. All right. Can I request everybody to settle down before we invite the panel? Can I request everybody to kindly settle down?